Let's bring in Ben Brun from Australian Stock Report, has been very patiently waiting by as we sort of gibber on. Ben, good to have you on board this morning. Can we actually start with one of the companies that we were just discussing before, JB Hi-Fi, falling at the moment, down around about 1.25%, $25.55. Your thoughts at JB Hi-Fi from what you've seen on the update at these levels?
At these levels, concerns. They've been in pretty good form recently, and consumer discretionary, by and large, is not a sector that we're in at all. There is a couple of exceptions to that. One is Kogan. Now, Kogan, I guess a similar offering to JB Hi-Fi, but very much online. That takes a lot of the costs out of the business model, i.e. staffing costs, i.e. shop fronts and rentals, etc., etc. So Kogan has actually released a couple of really good updates in the last month or so. That's where their shares have been in pretty good form. Again, if we're saying consumer discretionary space, if we had to be in the bricks and mortar space, it'd probably be with Premier Investments with their Smiggle offering and rolling out in Europe there. So, look, the quarterly numbers, at least they're positive for JB Hi-Fi. I mean, I guess that's a positive. What was really concerning is their New Zealand numbers. Now, New Zealand's economy conceivably going a lot better than us here in Australia, but their numbers in New Zealand today were pretty lacklustre, to say the least. So that is of concern, but overall consumer discretionary, it's not a space that we want to be in or need to be in. I guess on the positive side, again, for the JB Hi-Fi numbers released, was the fact that they've reaffirmed full year sales guidance and profit guidance. So that's probably why they're getting off a little bit lightly at this stage. I guess another thing is just to keep a very close watch on that Macquarie conference today. I think CSL is also due to give a presentation there. So that can be quite a significant market-moving event for individual stock names. So something we'll watch very closely.
Ben, just to stick with our attention on those consumer discretionary plays, and contrary to what we are seeing with JB Hi-Fi, Super Retail is out of the gates with quite a nice pop this morning. It's up 4.2%. I'm not sure if you've had a chance to really delve into some of the numbers there, but again, their like-for-like sales looked okay. I think it was the first 17 weeks of the second half. They were up about 4.2%. They are seeing growth in their auto retailing arm, their sports arm, BCF, Macpac, so all look to be fairly good, and it really seems to have come as quite a nice upside surprise for the market there today with that pop. Your view on a Super Retail group?
Again, not one that we particularly like. It's nice to see that their like-for-like numbers are still in positive territory, and obviously you need to look at the comparable numbers as well. It's got a reasonable offering in terms of what you mentioned there, their auto business and their sports business as well with Rebel Sports. They have always seemed to be able to maintain the integrity of their margins across a lot of their product base there. So in that regard, it's very good, but I still just come back to the argument that I said off the top. Consumer discretionary is really, well, in Australia at least, is not a place that we find a great urgency to be in, and I can't really see anything changing that dynamic in the foreseeable future, with the exception for something like Kogan, again with that internet offering, because just the changing tastes of or the changing habits of consumer purchases going more and more online. So Kogan doing well where the others seem to be faltering a little bit, albeit those numbers for Super Retail were okay today.
Super Retail for you, Mark, 4.3% in the environment that we've been discussing as far as retail. This is, for, as you rightly say, for the 17 weeks, the trading period. Yeah. Pretty good numbers.
Absolutely, and conceptually, this is a very smart business. It's a portfolio of niche businesses. Yeah. And in investment terms, that's a good idea. That gives them the flexibility to go where the margins are, and as Ben points out, they have maintained margins very well despite the pressure in the space. I like it. They cherry pick what works.
Macpac acquisition, there have been some concerns over it, but it's performed pretty well, and it makes sense. The Macpac. I was over in New Zealand last year. It's like Kathmandu.
Oh, okay.
And it's everywhere.
Right.
It's absolutely everywhere. Basically, it's Macpac, then Kathmandu, then a Macpac store, Kathmandu. Well, that's Queenstown anyway, where you basically throw a stone, it's going to hit an outdoor clothing shop.
Kind of diversified as well, because they have, is it Super Cheap Auto? Yeah. Which obviously has been, well, that's been under a bit of pressure with car sales and that kind of sector, but then you offset it with Macpac, you offset it with Rebel Sport in that area. All of their other brands there.
BCF was up over 5% for the 17 weeks. Super Cheap Auto up 4.2%. Some strong numbers. Admittedly, only 17 16 weeks into the trading period, but some strong numbers. And you're seeing that borne out at the moment, 4.8% higher. And a new CEO, keeping in mind that the previous CEO, who'd been there a long, long time, announced he was stepping down last year. The new CEO's only been in feet under the desk since February, but some pretty good numbers to come to the market with pretty much your first kind of public foray. So they're doing well, Super Retail. As mentioned, up 4.8%. Well, now at 5.5%.
Yeah. Look, Ben, what else have you been watching? We were talking a little earlier about just sort of moving the two big themes right now, the consumer and then the other one being housing. A couple of updates from the housing plays today. Domain, it's off 6.9%. Stockland down 1.9%. It was talking about lower residential sales, expecting the residential market to continue weakening. You have Mirvac, which is off 1.8%. Pretty tough environment, not to mention the feed through to all of the major banks.
Yeah, exactly. The feed through to the banks is probably a broader concern for the market overall. Some of the real estate investment trusts we don't mind, but obviously exposure into the residential space is something we try and avoid if possible. Now that Domain result that you flagged again today is showing signs of fragility in the Australian housing market, and just we don't. There's no conceivable bottom sort of just around the corner, we don't believe. And obviously this has massive ramifications for the banks, and the curtain's going to come up in terms of the banks starting tomorrow, obviously, with ANZ. And a lot of the clients that I speak to, I mean, still the backbone of so many portfolios is the banks. And you speak to some of these clients, you say, you've got a very high concentration of banks in your portfolio. A lot of them say, don't worry about me, mate. They've just got this she'll be right attitude on the belief that the banks are very, very defensive. That is not the case. Banks are not defensive. Dare I mention the R word? If we were to go into, say, a recession here in Australia, the banks get absolutely pounded. It's just been so long since we've had a recession. It's been obviously 20 years plus since we've had a recession in Australia. Obviously, you can go back to the GFC and see some of the performance of the banks over that period. But the banks are very far from defensive. They pay a great yield, no two ways about that. But, if the economy is going to take a turn for the worse, the banks are going to get absolutely slammed. There's no getting around that. So that is of concern. Now, interesting that you mentioned real estate investment trusts. Yes, I mean, there's some names in that sector that we like. Bunnings Warehouse Property Trust is one. Viva Energy, the property side of Viva Energy, is another one that we like. Very defensive earnings streams with equally as good a yield. Just obviously you don't get the franking credits, but that might be a reality we all have to get used to in the not too distant future anyway. So yeah, ramifications from the property market for the broader economy, and if we're focusing in on the banks. In on our market at least, the banks, and they are the most important constituents of our market, of course.
And look, we are seeing weakness across those major banks there today as well, ahead of those earnings which kick off tomorrow, like you rightly point out. Ben, we're unfortunately out of time, so we will have to wrap it up there, but appreciate you joining us this morning. Thank you so much.
Thank you very much.